Hello everyone. In order to have a good entry, we need a lot of factors. And the last factor is the clear signal for entry. The advantage of waiting for a clear signal is that you can choose a good zone to trade. Because waiting for the clear confirmation, the win rate and reward risk ratio will be higher. But the disadvantage of that is it takes more time and effort to wait for the entry. We have to wait for the candlestick patterns to appear as expected. For those who are busy with work and not a full-time trader, it will be more difficult. To minimize this disadvantage, we should use limit orders by placing orders at the best areas. So what are those areas? Let's get started. For each problem, I always want to dig deeply into it for you to know its characteristics. After that, we will come up with reasonable solutions, not just learn everything by rote. We dig into the limit trading strategy. It's not about the definition of limit orders because it's very simple, it's about its features. The difference between limit orders and market orders is that for market orders, we usually wait for signals and place orders following the desired direction. For example, when the price drops to a buy zone and starts making signals for entry, we have to wait for the price to bounce back up to make a buy order and place stop loss below that level. But the limit order is the opposite. If we place a buy limit order here, that means the order will be filled when the price is falling or going in the opposite of the desired direction. The mistake most traders make is that they usually place limit orders impulsively when they see a level. We have a level here. Generally, if they use limit orders, they will place a limit order here and set stop loss above this area. But actually, we shouldn't do that. We are placing a sell order when the prices are going up. If we place limit orders impulsively, it will be easy for the stop loss to be triggered. This is an example for you to see. So the limit order is risky that we don't wait for the price confirmation. The price may hit the limit order and then head to the stop loss. That's completely wrong. Now let's talk about the level again. A level is an area that can prevent the price from moving ahead. For example, we have a strong bearish level here. When the price reaches this level, the bear will tend to push down. However, when the price heads up to this bearish level, at that moment, the bull is getting stronger because the price direction is still up. So it's normal for the price to keep going up and break through the level. So the price doesn't always reverse at any level. It can reverse or break down. Let's do the math to see how dangerous placing limit order carelessly could be. We have a level here. Usually, we will place a limit order at the level and set the stop loss order above that level. When we set them like that, there will be the following cases. If the price reaches this level and reverse, then we will win. If the price breaks out the level, activate the stop loss, we will lose. Finally, if the price breaks out the level, activate the stop loss, then reverse, we'll lose as well. If we just place the limit order at the level without waiting for a clear signal, we will get more loss than win. Because of that reason, placing limit orders must be at the levels that the rate of the price bouncing back is as high as possible. There must be strong levels that we are discussing in this video. So how could we place limit orders that have high win rate? First, it must follow the trend. We should look at the higher time frame or the current time frame to see what the main trend is. Is it clearly up or down so that we can trade? If it's an irregular sideways, we will stay out of the market. Second, because it's a limit order, meaning that there's no confirmation, we have to choose an entry point where the bull will rush in a lot for buying entry. The rate that the price bounce back up will be higher, and selling entry is the opposite. The signal that the bull rushes in will be discovered by reading candlesticks. It can depend on a thing called momentum. If a price level is the origin of the strong, steep leading wave, we can place limit orders at that level. An engulfing pattern shows a very strong force of the bull, so a level having the leading wave that starts with an engulfing pattern are usually a safe zone. For example, Here we have a euro-dollar pair on 1 hour time frame. You can see that the trend is increasing very clearly, and here we have an area that can be possible to buy. To draw the buy zone, we can draw from the lowest point to the upper zone. It can be the zone of wicks or small candlesticks. Now if we place a buy limit order here, set stop loss below this level. The question is it possible that the price drops to the level then continue to drop further? The answer is definitely yes. However, what we need to know is what factors is supporting us. We have an uptrend, we have a strong momentum at buy zone, we have a bull holding the price here. We also have a stop loss order protecting us if the price dips down. The thing is that there are factors supporting our order. Of course, if we wait for a confirmation here, it will have an extra support factor. But we're talking about limit order where we don't have much time to watch the chart. Besides, we must know how to remove limit orders if needed. If the chart shows signs that do not support us anymore, we will remove the limit order. Because if we kept the order, it's more likely to activate our stop loss. Now let's see the price moves. Within the scope of this video, I just guide about limit orders, but we'll show more about how to take profit. Well, I also talk about take profit ways in many videos, so that you will have many perspectives and know how to choose the proper way. In this example, the order was executed here. There is a level that the bear can rush in strongly, that is this zone. So our take profit must be at least near this zone. We should set take profit earlier than where others can take profit. It's safer, and the take profit order is more likely to be executed. If we take profit in a flexible way, when we see the price reaches this level and creates these candlesticks, which are showing a bearish force, so we can close the order here. So now, can we place a buy limit order at this level like this? In my opinion, we shouldn't place a buy limit orders here. As you can see, this wave is not steeper than the previous wave. It is also shorter and does not start with engulfing pattern. It's more risky to place a buy limit order, even though there's still a chance of winning. If we place a limit order here, we still win. Most of us will be very regretful that I should have placed a buy limit order here. And that regret will be a big mistake. Because if you place limit orders at bad levels, the losing chance will be more than the winning chance. Now in this case, we can place a buy limit order here. Because as you can see, this is very a strong bullish wave. Moreover, this wave also broke through the previous top, so I will place a buy limit order in this level because there are many signs in favor of the order. Yeah, when the price dropped to this level, it immediately bounced back up. Now the question is, when should we remove limit orders? Or when should we not place them? We're gonna determine every factor that does not support our orders. For example, here we have an uptrend structure. And we have a level here that we can place a buy limit order. However, when the price goes up and it immediately crashes, then you should not place a buy limit order. Because if you watch the lesson about the leading wave, if this wave is a leading wave, that means the buy force on the previous bullish wave has been whipped down by the strong bear on the bearish leading wave. It could either continue to drop or go sideways a little then drop. That's a sign we should not place limit order or remove the limit order that is not activated. When we see a wave rising strongly, then immediately being pushed down. In the second case, we have an uptrend structure. Then a bear rushes in at the second top and pushes the price down. It creates a lower high, lower low structure. If we have this limit order here, it will usually go sideways above this area, then break down. At that time, we should remove the limit order before the price breaks through the sideways area. If we place a buy limit order this level and that's a sideways above the level a bit, now if the price goes down and activates the limit order, that means the price breaks through the sideways, creates low high, low low structure. So the price more likely to go down. In this case, we should not place a limit order or remove the inactivated limit order. And last but not least, the simpler one is that the price travels a long distance, then comes back the limit order. We should not place a buy limit order because at that time the trend is more likely a downtrend. We can place a sell limit order according to the recent trend. For example, here we have a strong bullish momentum. The price rose, then was immediately plunged by a leading wave. In this case, we should not place limit orders, or we should remove the limit orders. Or here, this is also a level having a strong bullish momentum. Then a strong bearish wave appeared. So we should not place limit orders. We should keep an eye on the levels that have a strong momentums. For example, this level. We don't know when the price reaches this level, whether it continues to go up or reverse, but we know that there are the bear rush in at that level. As you can see, the bear rush in here, or this bullish level, there are signs that the bull rush in, although the price went down after that. You can see that at any level having strong bullish momentums, there are signs that the bull rush in, or the bear rush in at the bearish levels. Also this zone. So the strong momentum is really important to place limit orders. If the momentum is not strong, it's better to wait for the clear signal of reversal patterns. This is just a few cases. We should face with more cases like this. You should backtest more to understand which NG is good, which NG is bad. Then you can apply it in your trading journey. I wish you all success, and don't forget to subscribe to the channel to watch the latest videos.